People believe that President Trump is going to reduce the size of government. That's not going to happen. The deficit is going to increase. It's going to become increasingly likely as goes on. And there's evidence of that right now. The Fed is lowering the interest rate and the long rates are rising. Investors are saying, fool me once, don't fool me twice. The market is already pricing in higher inflation. I think we're just getting started. Sadly, the real rate of inflation, not the CPI stated rate of inflation in the United States, is substantially higher than the interest yield on the U.S. 10-year Treasury, which means that savers are losing money. Gold traditionally has moved when consumers are nervous about the deterioration of the purchasing power of their savings. They have reason to be. I think that that's going to be the big thing. I'm not one who believes in the conspiracy theories around precious metals in the long term. I've been in financial markets my whole life, and I know that in the short term, trading desks manipulate prices all the time. Markets as big as the U.S. Treasury market, the Eurodollar market, and the Euro market are manipulated. So it would be very easy in the short term to manipulate the gold and the silver market. The idea that gold and silver prices were manipulated by mysterious forces in the period 1982 to 2022 fails to acknowledge the fact that gold was going down anyway. Why would you work really hard to manipulate the price of something lower when it was already going lower? Now, the part of that that's important involves the paper trade, because here's the way short-term manipulation works. Somebody will, understanding that in gold and silver markets, the paper markets, the futures markets, often trade in a day 100 times the value of the gold and silver, set aside for good collateral for that trade. So people construct a book, either long or short, in the futures market, and then they act in the physical market overnight when the volumes are the least to change the price of gold in the futures market. Settle the trade, done. That's going to continue to happen. If you have physical volumes required to settle trades that are 1% of the value of the trades that take place daily, the temptation for manipulation is too high. It's going to keep happening. In the context of the audience, I was talking about gold producers, and I think the one I had particularly in mind was G mining, where you had a management team that had a specific skill set, and the task at hand was exactly suited to that skill set. Their skill set is constructing big mines in tropical high rainfall environments. Another example would be Lundin Gold. But even coming down the quality trail, the high quality developers and explorers have actually had a pretty good year. The caveat there is the high quality. The sort of penny dreadfuls, the $15 million market cap companies with realizable asset values of $1 million, didn't have a good year. They didn't deserve to have a good year. In fact, they didn't have much gold. They were merely looking for it. So the increase in the gold price wasn't of much use for them. But I think that in terms of description of the type of stock that I was pointing out, it turned out to be true. I think that we are still in a market where the market progression described by Lobo Tigre, which is to say the end of the Lassonde curve, when projects are through bankable feasibility study, they've obtained construction financing, when they're shovel ready, or better yet, shovel turned, between that period in time and economic completion, seems to be the sweet spot in the market right now for juniors. You and I have been trying for 10 years to teach people to be better investors, and they don't want to be. They don't want to do the work that's necessary to separate, in movie parlance, the good, the bad, and the ugly. And following your emotions doesn't work in this business. It's very strange, and I know you've noticed this because you've asked me questions that referred to it, at least elliptically. When people are investing in a narrative that's a 5-year narrative, and they have trauma holding stock over a long weekend, it means that their strategy and their tactics are at odds. And unfortunately, that is not how money is made. Money is made in this sector with a 2-year viewpoint, a 4-year viewpoint, a 5-year viewpoint. And unfortunately, most of the people have a sort of a 2-month time frame, and it doesn't work. Consequence of that is that they fall for stories. They fall for narrative. They don't pay attention to whether or not that narrative is true. So they buy storytellers. Storytellers normally aren't good company builders. I notice postings on social media where people who have uranium as part of their handle are saying, I sold my uranium stocks. The game's over. That's lovely. When the hot money goes away, it means that sanity is reflecting to the sector. Uranium poodle, whatever these posters are. The fact that these people are now going to disgrace some of their commodity, I think is a very, very good thing. But I do think the fundamentals are improving. Whenever you and I have talked for the last 4 or 5 years, I said the real near-term catalyst was the resumption of Japanese production. It's happening. The material that was supply is now material held for fuel. Very, very bullish sign. I mean, the thing that excites the market is interesting because it's not going to matter for 6 or 7 years. What people are talking about now is data centers. Those facilities need to be permitted, financed, created. It will impact uranium demand 8 years out, 10 years out, no doubt whatsoever. What matters right now is Chinese new construction not progressing with shutdowns in Western Europe and the United States, but rather extending lives, and the pace of Japanese restarts. The thing that's happened very recently that's very bullish for uranium is the unsuccessful restart of Inkai, which I had believed to be the best uranium mine in the world. At the time that shut down, that was the lowest cost producer on the globe because of many things, including unavailability of sulfuric acid in Kazakhstan. That mine hasn't resumed production anywhere near at the rate that I thought it would. So there's 10 million pounds in reduced supply in 2025. And the spot market is already pretty skinny. Another thing that people don't realize, and you and I have talked about this in the past, is that the available for sale inventory in the spot market was reduced by my former employer, Sprott, by about 65 million pounds. Some days, the dollar volume in the Sprott Physical Uranium Trust is bigger than the dollar volume in the spot market, which is to say that the spot market has become the Sprott market. And the fact that there is a growing unavailability of supply, which I believe over the next 5 years will force both producers and consumers to meet each other in the term market. And that is ultimately healthier for both parties. I think we're coming back into the easy money period. I think you have to concentrate, but whenever I see hate in social media, I get attracted. And I'm seeing hate in uranium. When I talk about fundamentals around NextGen or around fission or around Paladin or around Lotus, there's an immediate outpouring of social media comment from people who 7 years ago couldn't spell uranium, and they don't dispute any of the facts that I brought up. They just say uranium's junk. In other words, they respond emotionally. I love that. In my life, from a financial point of view, when I'm hated, I'm about to be rich. I have opinions about the supply side of copper, which I think is extremely attractive. I don't have much of an opinion in the near term about the interplay between supply and demand. I have zero doubt that 5 years from now, we're going to have supply deficits because we needed to be investing to cure those supply deficits 25 years ago, and we didn't. I've said this before, and it's self-deprecating humor, but if your audience looks at me, they see a metaphor for a copper mine. 71 years of age, fat, bald, past his prime. When you look at the mines worldwide that we derive our copper from, Chuquicamata is 115, Bingham Canyon's 165. The newcomers, Grasberg, are 60 years old, Escondida's 45 years old. I mean, these things are past their prime. And we need to find and put into production one big mine every year, and we're not doing it. In fact, we're falling further behind. There's a wonderful copper deposit in the U.S. called Resolution, 1.2 billion tons. So a supergiant, 1.5% copper, 3 times the average mine grade worldwide. It's been in permitting 26 years. So zero doubt over the next 5 years, we have production shortfalls. What happens to the price between 2025 and 2030? I don't know. Is there a global recession? I don't know. From the point of view of extractive industries, Canada would be much better off with a Conservative government. Your Prime Minister didn't believe there was a business case for Canadian natural gas, despite the fact that gas in Alberta sold for $2 a million BTU. The same gas in Rotterdam in Canadian dollar terms sold for $14, and the Germans wanted to buy it. The fact that he couldn't see a business case is astonishing to me. I suspect that whoever your next Prime Minister is, given the government's need for revenue, will see a business case for the export of Canadian resources, which will be good. I think the political landscape change in the United States is good for Canadian resources too. One of the problems that your resource business, but particularly your oil and gas business, has had is access and egress to markets. I think that the Trump administration will remove at least a de facto objection, regulatory objection, to increased transmission infrastructure in the United States. That's good for Canadian natural gas. It's particularly good for heavy oil. If you don't have a political impediment in Canada and a political impediment in the United States, then Canada can get back to doing its own extractive businesses, which it does well. The Western Canadian Sedimentary Basin is one of the great oil provinces in the world. And Canada punches way above its weight in terms of human resources in both oil and gas and mining. Administrations in both countries that aren't overtly anti-development can only be good for your extractive industries. People are looking and they believe it when Trump says that he's going to impose tariffs. I mean, maybe selective tariffs, but he's not going to get away with it. The truth is that Americans, while they aren't uniformly brilliant, aren't stupid either. Tariffs are taxes, and he casts himself as anti-tax. And the supply chain in the United States is dependent on imports from other places. What tariffs do is they systemically raise cost for American manufacturers who are trying to compete against Chinese and Indian manufacturers who don't have those same impediments. This is a non-starter. So people are saying Canadian oil and gas is going to be subject to 25% tariffs. Ridiculous. Canadian politicians who know it's ridiculous, who don't want to run on their track record, are running against Trump. And they're saying, if Trump imposes these tariffs, why, we're going to do this. This is all Barnum and Bailey stuff. These are circus clowns in both countries, using each other to popularize themselves with their bases.